Morning, Chris. Nice to see you again. How are you keeping?
Yeah, very well, thanks. But I say very well, but my goodness, the UK has got crazy again, hasn't it? With new vaccines, new issues, new problems, etc. My goodness, it's something to think about.
It is, isn't it? I know it's a couple of weeks ago now. We had that Friday when the markets took the full force of the news coming through from this new variant. I think the markets dropped around 4.5% that day. So from an investor's point of view, I think we're quite glad to have the weekend to give us a break before the Monday hit again.
That's right. But what's interesting was there was some logical reaction to that. When there's uncertainty about the development of the world economy, you would expect there to be a negative impact. And let's not forget, the US was almost on holiday. They were on they just had their holiday, and they were wondering, what on earth do we do here? And people were watching. But here's the most important thing. What has happened over the last couple of weeks? What we have seen is the UK markets and the world's markets generally recover. And that's even despite what we heard in more recent times about yet more, not lockdowns in the UK, but more restrictions on how we live our day-to-day lives just ahead of Christmas. So despite all of that, the economic backdrop is okay. The way the world economies are thinking is quite positive, and people have still had a pretty good 2021. So no disaster, and still lots of hopes for 2022 of improvement and recovery.
So you've touched on 2022 there, Chris. I would say, and certainly our investment committee view is that expect more volatility, certainly next year. Do you see, though, this time in 12 months' time, we could be sitting in a positive place in regards to market returns? Or do you think it's going to be quite a struggle to get some positive returns?
It's certainly going to be more difficult, but that's because 2021 was, and I say this obviously with 2 weeks of the year still to go, so I guess things could still change, but probably not. 2021 has been a very good year for investors. And so therefore, you don't tend to have two successive very good years. But that doesn't mean that 2022 is going to be a problem. I think it's going to be a little bit more tricky, but that doesn't mean there aren't possibilities and opportunities. So my guess is investors will make money, and that will be assisted by the fact that the world economy will continue to open up and improve. And even though there are some uncertainties at the moment, clearly there's some Omicron and related issues. Unfortunately, we're going to see that for the next few months. That's the reality out there. But slowly we are improving. We're in so much a better position than we were a year ago, and that will always help markets. Here's what I think of the changes, though, for next year. I do think interest rates are going to go up. It may not happen for the Bank of England this December. I thought it was going to be honest, but maybe because of some of the latest news in the UK, they will hold that interest rate back until sometime in 2022. But is that a horrible problem? Not at all, because if the Bank of England were not raising interest rates, if we kept on having almost zero interest rates for a long, long time, then that would be an indication there wasn't a recovery happening. And what we can see is, of course, more jobs, more profitability, and hopefully a better Christmas for everybody. You put all of that together, and that's a good backdrop for 2022. So yes, probably less returns, fewer returns from investments in 2022, but my guess it would still be a positive return. And let's face it, compared to other opportunities out there, still very low bond yields, still unfortunately getting very little for your money in the bank, and still with a little bit of inflation out there, as we can all see day to day in our lives. It's good to be in something like the stock market with the opportunity to get dividends, the opportunity to be exposed to global growth and related. So fingers crossed, I think it's going to be okay.
Right, thanks, Chris. And just to quickly wrap up then, just your thoughts on active management. I certainly believe that next year being more active, whether it's on asset allocation, where you are invested globally in the world, or actually the actual companies that you're investing in, I can see active management becoming a bigger part of what investors maybe need to look for. Would you agree?
Yeah, absolutely. This still is. Maybe it's something I actually thought for much of this year as well. And it's kind of worked because we haven't been just led by US technology companies. We've seen the UK market do well. We've seen the European markets do well as well. My guess is, as you say, that trend will become much more apparent in 2022. And I think that will be much more relevant for the emerging markets. And that doesn't mean that you have to buy equities in China or India or some other emerging market country. That could be as simple as looking again at UK stocks and European stocks, because let's face it, these are areas which are very, very global already for many obvious reasons. So you're absolutely right. Active investment matters. Making choices matter, be it in equities, bonds, or alternatives out there. So this is hopefully where the role of investment managers and investment analysts can really add a lot of value for people.
Great stuff. Thanks, Chris. Nice to catch up. Thank you for the market updates. Have a great Christmas, and obviously Merry Christmas to all our clients and people listening to this little podcast. And hopefully when we return in January, we might be sitting on some positive news of some sorts, or more challenging news. It's wait and see, isn't it?
Absolutely. Merry Christmas, everybody. And take a few days off over Christmas on the markets and related. Think about it again in early 2022.
Top advice. Thanks, Chris.
Thank you.